I'm good too. Welcome to our, what's it, wet, cloudy, overcast day lecture on the 27th of October. Okay, great. I'm going to start with the lecture. Let's share my screen and we'll tell you where we are, what we were doing, and where we're going to lead up to. So, Mr. Buthelezi, Mr. Kumalo, we have covered 7 units to date. We've done the introduction. I introduced you to the Zambikes case study. We did the business processes with the Zambikes. That's our, you could call it our case study. Yes, a business. By the way, that business really does exist. We did the enterprise systems knowledge, which is also a repetition from our first semester module. We had the SAP S4HANA navigation, and I gave you an assessment. Now, that is so simple as an assessment. I'll keep that in mind just in case you are on a 48, 49, and you need to go to 50, or a 74 to move to 75. Then we did the procure-to-pay, which was Unit 5. Unit 6, we dealt with accounting concepts. Procure-to-pay, that was done with the new lecturer. Unit 7 was sales to cash, which I started with you. Unit 8 is inventory management integration. That's what I'm going to do today. Okay. We go to inventory management. Here's inventory management, right? So let's look at the slides for inventory management. Mr. Kumalo, are you able to see my screen?
Yes, sir.
Great. Right, there it goes, inventory management. And can you see this is Unit 8? And if you had to continue with this, we would be dealing in terms of the business processes. So it says, inventory management systems support the management of inventory levels in an increasingly complex supply chain. Now, I must remember, they chose the Zambikes case study because Zambikes is an organization that deals with companies nationally and internationally. They sell bicycles made of bamboo. They sell sports bikes. They sell bicycles that are able to transport sick people to hospitals. And they sell bicycles that are able to transport goods as well. Now, in order to make the bicycles and sell the bicycles, they need to have inventory. And that's what we're going to be dealing with in this module. By the way, Mr. Kumalo, I sent this on WhatsApp. Are you able to access it on your WhatsApp?
Yes, I saw it, sir.
Good, good. So under inventory management, we have the Zambikes inventory management. We're talking about their master controls, their master data, their inventory management processes, which is the transport of orders, the movement of goods, the stock counts, and the controls. And ultimately, we'll be talking about inventory management reporting. So you'll recall when we're talking about the accounting processes, we eventually had a reporting that dealt with the financial statement. Okay, so this is what's going to happen with the inventory management as well. In fact, all the units, they need to have some form of reporting that takes place. Okay, let's go on. Under inventory management, we talk about inventory as being an asset, because you must remember, if they had to consider your bicycle wheel, it has a value attached to that. And even though it's not money in the bank, but that wheel, you're able to put it onto a bicycle and eventually sell the whole bicycle. So that becomes an asset. Financial statements includes assets, liabilities, and equity. This is what we did in the accounting concept model or the module. The unit cost price for an inventory item includes all the costs incurred to get the item to its current state. Why do we need to manage the inventory? And one of the very important aspects of inventory is that it ensures that the financial statements are correct. If we have all our inventory sorted out, and we have money that's being used to buy inventory, then that needs to be reflected in the financial statement. Inventory is how retailers or manufacturers make a profit. It prevents cash from being tied up in too much inventory or too many slow-moving items. It prevents a loss of sales and production delays. Incorrect inventory receipting and storage can lead to substantial losses. Now, if we don't have an idea of what inventory we have in stock, how are we able to manufacture the bicycle? So for instance, if we had to get brakes on the bicycle, we need, like from Get a Brake, the supplier, we need to ensure that they have brakes available. Financial statements for companies include assets, liabilities, and equity. Inventory is recorded as an asset in financial statements. Give me a minute. I'm just going to go to the car. My son is making a noise out here where I'm lecturing, and that'll help, right? Okay. I should not have any disturbance. So all that would be stock on hand, and we need to ensure that each stock item has its associated price with it, and ultimately, when we put all of them together, we're going to get a price for the bicycle. We also need to ensure that we have inventory just in case we have to repair a bicycle, or one of the customers, let's say they damage their bicycle wheel and they want to replace it. So we need to be able to keep stock of that. Inventory is often an organization's greatest asset and therefore needs to be managed. There are more profitable ways to use cash than to tie it up in too much inventory or too many slow-moving items. So let's say in our Zambikes example, we've kept the bicycle frame. We've got lots of bicycle frames on hand, but we notice that the customers are not buying bicycle frames. You won't buy a bicycle frame all the time, but maybe you will buy a bicycle tube on a regular basis because the tube is hard wearing. They probably have lots of potholes and they damage the wheel and the tires, and they need to buy bicycle tubing. So that is a fast moving inventory item. The bicycle frame won't be such a fast moving item. Or let's say the bicycle handle for that matter, right? Or let's say the bicycle seat. Insufficient inventory means lost sales and production delays. So if I don't have enough bicycle tubing and the customer requires this, then they won't come and buy the bicycle tubing from me. They will go to another vendor and I'm losing out on a sale. Alternatively, if I don't have the bicycle tires or the tubes for me to produce the bicycle, then I will be wasting money because I'll have to pay for the staff to be on duty and they are just sitting around and waiting for the bicycle tires to come so that they can install it onto the bicycle. Incorrect inventory receipting and storage can lead to substantial losses. Ooh. Now, I say to the factory employees, I've got lots and lots of stock. Meantime, I don't have that stock because I haven't kept a receipt of the inventory that's coming in or the inventory that's going out. Unmanaged inventory often means your financial statements are incorrect. Remember, we said that inventory is recorded as an asset in the financial statements. If I don't include it as an asset and it's not managed properly, then what's going to happen? My financial statement is going to be incorrect. And we can't have an incorrect financial statement now, can we? Because our, well, we're not going to make a profit. So here's the inventory management organizational structure. You can have a look at it. There they have all their company codes. There's Zambike's company out here. They're in Lusaka. Remember, our Get a Break supplier is from Lusaka. Mr. Arangeni is not here, or else he would understand my joke about Get a Break. Here's my semi-finished goods, my finished goods, raw materials, and let's go on. A client or a tenant is a self-contained unit in a SAP system. Now, this is when we are doing the practical work, the workshop in Unit 8. The company code, I think you know the company code for Zambikes now, it's ZM00. It's the smallest organizational unit for which financial statements need to be prepared. A plant is within a company, right? And give me a okay, so a plant is within a company, facility for manufacturing, distribution, storage, or the rendering of services. Storage location allows for differentiation between various stocks of a plant in a plant. Shipping point is the part of the company responsible for the type of shipping. So if I have to give it off to a supplier, remember we used pick and take the other time? Let's go on. Here's a diagrammatic representation of the material master. There's the accounting data. We've done that unit. We've done the purchasing, sales, and in this unit, we are talking about inventory. The material master contains all the information about a material that a company needs to order in order to manage it. The components within the SAP system is sales and distribution, materials management, production. Doesn't this look familiar, sound familiar as well? Materials management in the app, in the S4HANA Fiori Launchpad, we have these apps. Mr. Buthelezi, Mr. Kumalo, does this sound familiar?
Yes, sir.
Oh, good, Mr. Kumalo. Thank you. I'm just checking if you're there as well. Maybe you put the computer on and you went far away. Under Materials Master View, we have the basic data, the client, the plant, the storage location, the client, and we pretend to be the manager, we pretend to be the factory employee, we pretend to be the CEO at times, and we pretend to be the accountant because we want to view different aspects of the ERP system. For inventory management, the material master contains the following: the quantity of a material, the plant, its storage location, the cost per item. Let's go on. So here's a screenshot of the S4HANA Fiori Launchpad app. So the stock type determines whether inventory can be sold or counted. Here's my stock type. I got the transport Zambike. It's the value, the total value. It's in this. When we do the practical part of it, we will see what's happening, right? Now I'm just going through the theory behind Unit 8. In the materials master record, various stock are managed at plant level and at storage location level for both the current period and the previous period. The plant stocks, except for stock in transfer and stock in transit at plant level, are calculated as the total of all the storage location stocks. The following section describes the stock categories and stock types in the material master record. Yay, maintain material master. That's in the S4HANA Fiori Launchpad. That's an app out there. What's the total value of the stock? It's the sum of all the valuated inventory of its material. It consists of the valuated inventory, that means inventory that has a value that your company owns. Again, this is an asset and we record it as such in the financial statement. Materials that are not valuated would be non-stock materials and consignment materials. Unrestricted use stock. The company's own inventory that is physically located in a plant that's valuated and not subject to any kind of usage restrictions. And you can go on reading quality inspection stock, block stock, stock in transfer, stock in transit. Stock in transfer that is created for a stock transfer via a stock transport order. Now, stock in transfer and stock in transit, you can think of this as stock that has left the plant. It hasn't reached the supplier, like pick and take. It is en route from, say, Lusaka to South Africa. It's traveling by either road or rail. Here's my master data controls. This is maintained centrally through authorization and all changes are visible. You can read all of this. Here's the example. There's my user ZMB100. When you do this, it'll have your username in there. Master data can only be done by a few users. Now, we don't want everybody to be able to change the master data. We don't want that, right? And we don't want the factory employee to be doing that. You probably need a specialist, an IT specialist or a SAP ERP specialist to do that. What are some of the processes with regard to inventory management? Enterprise systems there's one called the Perpetual Inventory System, daily recording of inventory leaving or entering the organization's control. This is recorded as a goods movement. The other one is a stock transport order. This can be used to request stock from one plant to another plant. Inventory counts are controlled as they highlight inventory risks. For example, damaged or stolen inventory, incorrect goods movement. Now, remember in one of our workshops, our practical sessions in using S4HANA, we spoke about goods being damaged and had to be returned. Yeah, think about it in this aspect. Enterprise systems use the Perpetual Inventory System, which keeps track of inventory real time and is updated whenever inventory leaves or it enters the organization's control. Inventory management risks can be substantial. Lost inventory refers to inventory that could be stolen or inventory that has been damaged. Let's say, for instance, they packed all the bicycle wheels one on top of each other and the bicycle spokes were damaged. Now that's a loss to the company. Incorrect goods, not counting the quantity accepted. So when the delivery guy comes in, he brings along bicycle tubings and he has a bicycle at home. So every time he brings in 100, he takes one away or two away. So you don't count, you think, oh, I have 100 bicycle wheels or bicycle tubings. And when the company is busy assembling it, they discover that there's a short of 2 bicycle wheels. Now checking the quality of items accepted. So once the items are accepted, and if they are damaged, you still need to pay for it. And that's bad. So if you're the factory employee that's receiving the goods and the bicycle wheels that are being brought in are damaged or buckled or there's scratches on it, well, it has to be paid for because your employee signed for it. Accepting items that were not ordered. This can result in costs of returning items. Oh, I'm very familiar with this. Now, my wife, she buys online from Mr. Price. She buys it and then she, or let's say my neighbor ordered it, it wasn't so, and I signed for it. Now, the poor neighbor has to sign and pay for it. Or if you don't like the item anymore, which happens with all the ladies, they will try the outfit on, it doesn't fit them because maybe they put on a little bit of weight, and they need to return it. When you're returning your item, you are charged for that. What is the impact of goods movement? Here's the example. When a delivery note is created, the purchase order is sent, and ultimately it will update the applicable applications. When we do the practical session, this will make much more sense. Goods movement, we can update the goods movement. The accounting document contains relevant information to post. We will post the document date, the general ledger account numbers, and the company code that is derived from the plant. Now, this may seem too theoretical. When we do the practical aspect of it, you will be able to pick it up from the apps where we have inventory management. Which of these will generate an accounting document? Would it be the goods receipt or scrapping of goods? Right, we will go through all of that, right? You can read all of that. Goods movement and the material master. Goods movements can update the material master. Material valuation, what's the standard price for finished goods or moving price for raw materials, the moving price, the total cost for all items, and right. Go on reading that. What's materials valuation? How do you evaluate the material? To evaluate the material, various prices are stored in the materials master record, such as the future, current, or previous standard prices. Now, let me talk about this. Airbus, Boeing, that's a company that manufactures aeroplanes. Let's say, for instance, South Africa has to order a jumbo jet from them, right? Airbus. You must remember it takes about a good couple of years to manufacture it. Now, Boeing will have to charge South Africa in 2 years' time what the price would be. So that's what they talk about, a future price, future valuation. Because when Boeing delivers the aircraft in 2 years' time, they may have said it's $1 million. In 2 years' time, it could be $1.2 million. Valuation is preset as follows in the standard SAP ERP system. Moving average price is used for materials procured externally. Standard price for in-house produced materials. So let's say we're buying the bicycle tubing from an external company. That would be the moving average price. But let's say, for instance, we are using in-house produced materials. We are producing the seat for the bicycle. We have a leather covered seat or a plastic covered seat that is done in-house. That's the standard price. Read up on the moving price is the weighted average, the total cost. It's updated with the supplier. I'm just going to go through this quickly. The inventory workshop. Here are the people involved: the finance manager, the inventory administrator, the factory supervisor, and the factory employee. So the factory supervisor will ensure that this post-stock count takes place. The inventory administrator will display the stock, will create the transport order. The factory employee will issue the goods. The inventory administrator would be able to display the stock in transit. And ultimately, the stock or the goods will arrive. When it arrives, there'll be a receipt of the goods. You'll display the stock, and a transport order can also be displayed, and that's the end of the story. So that's your graphical interpretation. A stock transport order, there's your graphical interpretation of this taking place. What happens at the issuing plant? What happens at the receiving plant? So the receiving plant will send off a stock transport order to the goods would be issued. Let's say, for instance, the storage location has the bicycle wheels. The goods are sent transit. Transit means they are being transported by rail or road, on a truck or a train. And at the storage location, it's unrestricted use in stock, or it's stock in quality inspection, or we block the stock, right? So you can read on all of this. Purchase acquisition is converted into purchase orders. The receipt can be planned. You can deliver the costs. Now, when we do the practical work, you will see this taking place where we will actually include a delivery date or a scheduled delivery date. Let's say, for instance, we'll say in 3 days' time or in 3 working days' time. All right. Let's. What are some of the types of goods movement? The supplier, from the supplier in production, we can supply it unrestricted use of stock, stock in quality inspection, or we can block the stock. There's all the explanation that goes with it, right? So in number 1, goods receipt from the supplier, and 2, goods receipt from production, and number 3 would be goods from the customer. And like I said, we can be able to return the goods, replace the goods, or whatever. Posting stock counts. What's the difference between stock counted and book inventory? Material document updates the material master. We'll read on all of that. We'll come back to it. Inventory counts. Needs to be performed. Right. We'll come back to that because I haven't done any practical work with you. What are some of the reports that we'll need to generate? Whether there are low stock items, which one is fast or slow moving stock, or even stock that is lost or damaged or stolen. These are the reports that we'll need to create in the inventory module. Document list, the material documents, the accounting documents, cancel material documents, and what are some of the reasons for the movement of the stock. We'd also like to know the total quantity of stock, the value of the stock, and inventory levels in the organization relevant to the stock, right? What are we identifying? Low stock, fast moving stock, or slow moving stock. Like I said, my bicycle frame would be a slow moving stock, but the bicycle tubing would be a fast moving stock. And that about covers the inventory module. The inventory module, we spoke about the Zambikes inventory management, the inventory module organizational structure, the master data. What are some of the processes in inventory? Goods movement, the stock counts, controls, and ultimately we will have to have some reporting that takes place, like low stock, fast moving stock, or stock that's returned, or damaged stock. And with that, I'm going to stop the recording and I'm going to stop sharing my screen. Okay. Hello, Mr. Hadebe. I didn't get to see you. Mr. Naya, Mr. Jagannath. Hello, how are you? I went through this a little, Mr. Naya, thumbs up. I went through this a little fast because I wanted to cover the aspects dealing with the theory behind the last unit in this course. We are almost at the end of this course. We just got to cover unit 8, and we got to cover the practical aspects to it. So we got inventory management integration, and we're doing the work with it. And then I'll give you some 2 assessments, and we are done. what you say to that? Hadebe, what do you say to that? Mr. Naya, Ms. Jagannath, Mr. Kumalo. Oh, thank you. Mr. Butalezi.
It's good, sir.
Okay, so we stop the recording. Please stop recording.